Well, it's great to have you with us, and it's harder to think of a bigger story, especially for Canada this week, than the tariff tensions. Donald Trump on the verge of hitting Canada and Mexico with 25% tariffs as soon as this week, and potentially doubling a levy directed at China. And we're going to be covering all the aspects. Certainly, we're watching the stock market reaction, but the bigger question certainly right now is whether or not Canada's economy can truly navigate this tariff threat. And to kick us off this hour, we're joined by Jean-Francois Perrault. He's Senior Vice President and Chief Economist at Scotiabank, who's tracking all the geopolitical matters and leaving a lot of economic unknowns, JF, for the Canadian economy right now. But let's just start with what we know right now, and as an economist and you working with your team, what you're trying to determine.
Well, I mean, sad reality is we don't really know that much. We know that in principle, tariffs are coming on tomorrow. President Trump has indicated that a number of times last week, although even that messaging over the last week has been pretty sketchy. We had, the Commerce Secretary yesterday indicate that, President Trump is thinking about tariffs today, hasn't decided what he's going to do. So there's uncertainty about what we expect tomorrow, if anything. So there's still some hope that we get another pass. And then it's just a series of additional tariff measures that come into place that aren't specifically aimed at Canada. Some aluminum steel tariffs coming on March 12th, in principle again, the reciprocal tariffs, tariffs on lumber, other things coming on April, around there, early April. All that remains to be seen, but it's clear that we're still in the very early days of what seems to be a pretty aggressive American posture on the trade side, for which we are still waiting for some evidence that he's truly serious about.
Yeah. And look, I mean, I think if we review the most recent GDP data for Canada, maybe we had an encouraging sign coming into this year for the growth picture for the country, helped in part by lower interest rates. But, a lot of people are worried this kind of uncertainty, whether we see the tariffs or not, is already impacting business decisions. And if we do see the tariffs, a lot of people have, asked, how severe we're talking about the impact on the economy, what that means for interest rate policy, what it means for whether we need some kind of emergency stimulus, and then all the inflationary ramifications, so many moving parts. So what do you think is the most important thing to be watching when we're trying to figure out what happens to Canada's economy this year?
Listen, I mean, as you've indicated, if we were to set Trump aside for a moment and assume that we don't have a president who is, very aggressive on the tariff side, the reality is that incoming data in Canada have actually been pretty strong. In fact, remarkably strong, in large part because interest rates have come down as much as they have. And of course, we're very sensitive to lower interest rates. But the reality is that, that momentum that we've seen even early this year is very much at risk because we know that uncertainty is extremely high as Canadians are anxious about what may or may not happen. And so long as we don't have clarity on what may or may not happen on the tariff side, of course, then this weight of uncertainty is going to impact businesses, it's going to impact households, at least we expect it to impact households. We know that the businesses are more cautious. You look at the measures of confidence on the business side, they've come down a little bit, same on the household side. And so the key in some sense in the very short run, the next few weeks, hopefully,
right,
is to get some clarity on what might happen on the tariff side. Once you get that clarity, maybe uncertainty falls a little bit, and then people can start to think about the world from a less risky perspective, although, a perspective that is probably weaker than otherwise would be the case because you'd have the weight of tariffs at this point weighing on economic activity in Canada and the U.S. and elsewhere around the world.
So on the one hand, thank you for answering questions that are hard to answer, given all the pieces that have not necessarily played out so far. But as all that's unfolding, we know registered Liberals have until March 9th to cast their votes for the new leader of the Liberal Party. And then we'll be watching very closely for the next federal election in this country as well. And some have made the point that in light of this uncertainty, you're hearing a lot more politicians talk about pro-growth possibilities for the Canadian economy. You and the Scotia team have been doing a little bit of analysis on what to be watching for. What stands out?
Well, listen, I mean, I think there is a really bright side potentially a really bright side to this kind of existential angst that we're facing, which is, as you've indicated, politicians on the conservative side and liberal side seem to think, and the provincial side seem to be much more cognizant of the challenges that we're facing and how that's hobbled growth over the last number of years, and seem to be willing to take pretty aggressive steps to make that, to change the course on which we're on. So there's, I think, a fair amount to be optimistic about with respect to the election, regardless of who wins, because we will have a government, I think, that is more inclined to act on, in particular, the kind of the physical, the capital investment side of the economy in relation to, the outgoing Trudeau government, which focused more on the human capital side of the economy. So we're going to be looking for those types of things, but also, we kind of like to think about, like to see whoever takes power to be, much more accountable for the economic outcomes that they generate. So we wrote a paper last week where we basically argued that, there needs to be a solid accountability framework around government decision-making on the political side. And one of the things we recommended was for whoever wins or whoever campaigns to perhaps campaign on a promise of generating an increase in GDP per capita of, say, 2% a year for the life of their mandate. That would obviously address some of the weaknesses that we've seen in Canada over the last number of years, where GDP per capita has fallen. And GDP per capita is not the ideal measure, like the best measure out there. There are weaknesses there, but it is a tangible measure. And that commitment on the part of governments, just like a corporation would commit to, certain outcomes for its shareholders, and then there's accountability mechanism there. Yeah. That commitment on the part of government then force decisions within government to be clearly, focused on achieving, say, this growth objective. So a very kind of strict frame around decision-making on government. And of course, because this is based on GDP, because it's based on population, you get a real-time check on how governments are doing in terms of generating the kinds of increases in standard of living that they've indicated to their voters that they would generate. So it's kind of a multifaceted tool that, of course, binds the hands of government, but binds them in a right way in the sense that it's committing them to tangible improvements in the lives of Canadians.
All right. Well, accountability would be key if we could see more progress there for sure. Thanks very much, Jeff. Appreciate the break.